Hey guys, Joe DeMarco here. So yes, the Feds did announce another rate cut yesterday, but that doesn't immediately mean that mortgage rates will drop dramatically. In fact, since the announcement of the rate drop yesterday, I'm going to show you where interest rates actually went. I want to talk a little bit about what does that rate cut mean. It just basically means that the Fed, they're acknowledging some softness in the economy, things like jobs, inflation, and growth, and they're taking action to keep things from kind of slowing down too much. Right. The lower policy rate helps banks and lenders, in theory, which can gradually filter into lower borrowing costs, but mortgage rates don't move in lockstep with the Fed's announcements. They're more strongly tied to the 10-year Treasury yields. This chart here that I'm going to explain to you here in just a little bit. So, really, what does this mean for you as a buyer since the Feds have cut rates? For you as a buyer or our agent, maybe your client, now is a great time to kind of get ready, right? Improving your credit, getting pre approved, having documents in place so that if and when rates do drop below that target price you're looking for, you're ready to act. For you as an agent, you can use this news as a conversation starter with your buyers and even with your sellers. It doesn't mean that rates instantly are going to go lower because of this announcement, but it does mean that the window is open. And so your buyers and your sellers should get ready, right? So, guys, again, they did announce the rates, a Fed cut rate yesterday. It didn't translate into rates getting lower. It actually translating into rates went up a little bit because there's more to the Fed cutting rate than just the Fed cutting rate. There's all that other data that's in place. And typically, guys, if you're looking at where rates are going, this is going to be your best chart to look at, the 10-year Treasury bonds, right? And what these are here is these little red and green ticks. These represent a day in trading. So each day in trading of these 10-year Treasury notes. As you can see, since about October 6th, we've had a pretty good decline in that Treasury yield. And on October 22nd, we were down to the lowest the yield's been in a very long time. We were down to 3.96%. And then in anticipation of the Fed announcement, you could see that this Treasury yield started to creep up. And yesterday, the 28th, you could see where that yield was at. And then, or 2 days ago, I should say. And then yesterday, after the announcement, you can see where that yield went. That yield went up, which means uh, generally interest rates are going to go up with it. So as those yields go higher, interest rates typically lockstep with that. And as those yields go lower, interest rates will usually come down. Now, the movement from here on the 22nd to yesterday after the Fed announcement, it wasn't a lot, but it was enough to maybe make that rate move a tad bit. Maybe not enough to take you to the next level. So, say from 6% to 6 and an eighth, but it could be the difference. And maybe for getting from 6% to 6 and an eighth, maybe you were at 6 and an eighth, you wanted to get 6%, and maybe at that back on the 28th, it was costing you, let's use $1,000 to get that rate. Now, with the yield going up a little bit, maybe it's going to cost you $1,200 to get that rate. So, if you are watching the market, don't always just listen to what the Fed's saying. Look at this Treasury yield and try to look where that yield is going on a daily basis. And that's going to give you a better look at where interest rates are. Okay. So, I hope that this helps. Again, typically, after the Fed announces a rate cut, a lot of times we do see these rates go up because sometimes they've already had that rate drop baked into the market. But we'll see where today goes, and and then early into next week. But as of today, we're starting out. We're even a little bit higher. We opened up a little bit higher than where we ended the day yesterday. So Let's keep our fingers crossed. If you guys want to talk about your particular situation, you want to see what the difference in interest rates today will make on a mortgage, please feel free to reach out to me. All right, guys, this is Joe DeMarco, not your average Joe. I'm right here in sunny Southwest Florida. Talk to you soon.